පුළුවන්ද? Good morning all. Welcome to Infinity Learning Space. Those who don't know about me, I'm Nilantha Weerasinghe, auditing, lecturing for auditing subject almost more than 8 years. Today I'm going to discuss with you some of the important auditing standard focusing on December 2024 exam. There will be some more sessions in future to cover rest of the syllabus, but today we will focus on some important few important auditing standard which are relating to planning series. Before we start this session, let me tell you the content of today's session. You know, when we take this audit universe, I'll tell you in future also in my session, during my session, we can divide this syllabus into 3 main areas. Purely I'm talking about auditing. There are some other chapters also, let's say audit quality control, code of ethics. Keep those aside for the time being. But if you take this audit universe, I mean, I'm purely talking about auditing standard. All these standards we can divide into 3 categories. One set of standards are relating to audit planning. Another set of auditing standards are relating to audit evidence gathering process. And finally, final set of auditing standard we can identify as reporting related standards. Today, main focus is to cover audit planning related standards. So that's the basic content of today's session. You can see the screen. I have selected the recent past paper, not to discuss this past paper, but to explain you some of the important areas before you that you should understand before you sit for the exam. So that's the purpose of taking this. If you take your paper, you know, subject name is Advanced Audit and Assurance. It's corporate level. We call it as CL1. These points that are there in the first page is really important to understand. You know, all questions are mandatory. There are no selections. That is first thing that you should understand. And there are 3 sections in this paper. Section 1, 10 multiple choice questions, MCQs. Students believe this as a gift, but for me as a lecturer, this is not a gift. You should invest some quality time to understand examiner's requirement when it's come to MCQ questions, because almost all answers are very much similar to each other. This is not grade 5 scholarship exam, O-level exam, to have contrast or two different or answers are totally different from other answers when it comes to selections. No, not like that. Almost all answers are very much similar. You have to be very much careful when you select the right answer. Section 2, there are 4 questions. Each questions you will take 10 marks, right? Yeah, 10 marks. This section will cover basically some of the auditing standards and business process related question, because even though we call this subject as advanced audit and assurance, there is internal control plus business process In other words, controls relating to business processes. So that part also there in this. So that part, assurance engagement, audit quality. So those kind of topics will be tested in section 2 together with some standalone auditing standard. Section 3, there are 2 questions, and this is the game changer section, I would say, because there's 40 marks for each question. You will get 20 marks, and this section is the heart of this paper. Why I'm saying like that? Question number 6 and 7 comes under section 3. Question number 6 basically covers audit planning series most of the time. That is not a mandatory requirement for examiner to select audit planning related questions to section 3, question number 6, not like that. But if you analyze past paper history, you will see most of the time audit planning related standard will be tested in question number 6. So planning related, there are 4 basic standards. SLUS 315, identify and assess risk of material misstatements through understanding the entity and its environment. Second, response to the assessed risk 330. 320, audit materiality and basic audit planning standard, which is SLUS 300. There are 4 standards. So you have to be thorough with those 4 standards to manage question number 6. Question number 7, last standard. Most of the time, examiner will focus on audit reporting section as well as audit evidence gathering section. Examiner will ask you to handle audit, perform audit procedures for certain accounting complex scenarios. Let's say examiner will give some case studies, selecting some accounting standard, let's say investment property, how to audit investment property, inventory, how to audit inventory. Some of the complex accounting scenarios will be given as a case study in question number 7. So then you have to apply your knowledge, audit procedures to audit those complex accounting scenarios. Plus audit reporting elements will be tested in question number 7. So that's the format of this paper. I thought of this is really important for you to explain, because you should understand for what areas you should focus when you sit for this exam. We have almost 1.5 months or more than 1 month, maybe 5 or 6 weeks prior to the exam, right? Or that kind of time period we have. During this shorter period of time, you should have focus, learning plan. Otherwise, you have to start from the beginning and continue your learning towards your study pack to the end. It is not workable right now because we have a shorter period of time. That's why I'm explaining the content of this paper. And another point is really important. I'm always telling this to students because you are not giving your attention to these keywords. If you take each and every question, you can see one word your examiner has highlighted. If you take question number 2, part A, examiner want you to advise. The word advise is highlighted in bold. Why? After exam, students are normally talking to us and tell, this paper is very easy, I have written to a great extent, but when it's come to final results, you have failed. What's the reason? You don't understand examiner's real requirement. If you don't understand what examiner is really required, you will write some other things than what examiner is really expecting from you. That's why examiner is telling you, student, first read what is I'm expecting from you. That is to advise here. Don't elaborate or don't describe. You have to advise. If you don't advise, examiner will not give the marks, the allocated marks. If it is 5 marks, you will end up with 2 marks or 1 marks. That's the reason, main reason behind low score or failures. You don't understand examiner's requirement and explaining or writing to him to the point. That is one of the key reasons to fail this exam. So I am telling before we start this session, understanding examiner's requirement and writing to the point is the secret behind passing this exam. Writing to the point is the secret behind passing this exam. Remember, some of the students read past paper questions together with suggested solutions and go for the exam without writing experience. The result is definitely end up with low score or failures. Definitely. Remember, writing. I'm emphasizing this word, is the secret behind passing this exam. Nothing else. So you have time, start writing, practice past paper questions, model paper questions, and study pack questions, because don't forget the study pack also, because that's the basic learning guide for you. So you have to refer to that as well, right? With a plan. Otherwise, you will, if you sit and read the study pack from A to Z, that will not give the right results to you, right? You have to be smart. Okay, so that's the secret behind passing this exam. Okay, having said that, so that's the introduction to this session and introduction to the past papers and the way you should handle this paper. With that, I hope you all can see this screen. You can see, this is my way of teaching. You can see all in this Excel, all the accounting auditing standard. SLOS 300, right? This is SLOS 300. SLOS 315, 330, 320, 240. So these are, or 5 means audit evidence related standard. And 580, 560, 570, 540, 530, and audit reporting related standard. All audit reporting related standard I have summarized here. You can see SLOS 700, 705, and 706. Likewise, all auditing standards you can see in a conceptual visualization. It can be a table, it can be a diagram, it can be some sort of visualization. That's the beauty of this Excel. I think you have never seen a study document like this. I don't like to give you very lengthitude for you to refer and read, because my primary intention is to give you proper knowledge to pass this exam. That's number one. Then if you want to be an expert in auditing, there are some sort of different studies you have to follow. But my intention is to make you a past students, or if you are really following this thing, earning prize also is not a difficult task. Remember that. So what I want to tell you, I will share this with you, all auditing standards in one Excel sheet, which will give you, right, a point to start your learnings or to apply your knowledge and to understand this properly, right? Fine. So I'm going to explain you today 300, 315, 330, 320. So these are the basic standards I'm going to cover today. All these 4 standards are related to audit planning, together with one past paper question. because this is very much exam focus session. Prior to start audit planning series, let me explain you audit universe. What do you mean by audit universe? Right? Entire auditing process, this holistic view is really important for you to plan your studies. More than learning audit planning series today, I believe personally the next 15 minutes will give you proper insight to plan your studies. Next 15 minutes sometimes will change your current approach to this study, to this subject. Sometimes it will change the way you plan to learn this subject within this shorter period with this diagram. I'm trying to tell you the entire auditing universe and how you should plan your studies. Okay. Let's say if we take this subject as a pyramid, right? This is really important. I'm again emphasizing. Next 30 minutes, next 10 to 15 minutes is really important for you to plan your studies. Let's say, let's assume the entire process as a pyramid or triangle. So you are here today. You are here today, right? So you are trying to start this journey or learning or studying this subject, let's say today. Your ultimate objective is here. Your ultimate objective. What is your ultimate objective is to give an opinion. Give an opinion. Right? That you know. Ultimate objective of auditing is to give an opinion. Give an opinion. How do you deliver this opinion? Through a report. Through a report. Right? So my writings are not that perfect. Please bear with me. But you can listen to me and you can have a piece of paper right now itself and you can continue this with me. Your ultimate objective is to give an opinion through a report. In this opinion, what I am trying to say, you're trying to say, you're trying to see or you are trying to deliver whether financial statements are free from material misstatements. Whether financial statements are free from material misstatements. For me, this is the golden word or golden 2M in auditing. Throughout this journey of auditing, you cannot forget this MM. MM stands for what? Material misstatement. අපි සිංහලෙන් කියනකොට ප්‍රමාණාත්මක සාවද්‍ය ප්‍රකාශන. Material misstatements. In general, if someone asks from you, what do you mean by material misstatements? You can say it's fraud or errors. Fraud or errors. Now you see, your opinion is focusing on to see whether financial statements are free from errors or frauds. Errors or frauds. That's the ultimate objective. That's what you are going to form through this report. That's what you are going to deliver as an opinion. So that's the end, top objective of this journey of auditing. Who can give this opinion? Can CEO give this opinion? Can Chief Financial Officer give this opinion? I don't think. Why? They are the people who are responsible to prepare financial statements. And by themselves say financial statements are free from material misstatement. Which is not independent. The person who is giving this opinion should be an independent person. Independent, we are talking in which chapter? Code of Ethics. The person who is giving this opinion should follow or comply with Code of Ethics. In Code of Ethics, what? For what they should comply? Fundamental ethical principle. What are the fundamental ethical principles? Integrity, objectivity, professional competence and due care, and confidentiality and professional behaviors. These are the 5 fundamental ethical principles. Out of that, I'll take objectivity out and I'll write the golden word independent. Independence. The person who is giving this opinion should be independent. I believe by now you have learned this word independence. The person who should engage for this audit should be independent in mind as well as by appearance. Appearance. What do you mean by appearance? Now let's say audit partner, audit manager is a good friend of finance manager. You declare this relationship prior to you start the audit with the senior management. Look here, those charged with government audit committee, your finance manager is one of my friend, but I don't care about friendship. I will comply with relevant ethical standard, relevant auditing standards during the course of audit. That is independent in mind. You have declared your interest with relevant parties. Independence in appearance means, now let's say every evening you are going to have a drink with finance manager after audit. By appearance you are not independent. You have told those charged with governance saying that I have a friendship but I am complying with all the ethical standard and relevant auditing standard, and evening time you are going to have a drink with him, and which indicate by appearance you are not independent. So the person who is performing this audit should be independent by mind as well as appearance, right? So we can have long discussions, but for the interest of time we don't have. But remember, person should be independent in mind as well as in appearance. Okay, then fine. Yes, you need to be independent. There's no doubt. Then this independent person, the independent person should follow the ultimate to achieve this end goal, final goal of giving this opinion, or to see whether financial statements are free from material misstatement. Auditing standard says auditor should follow all the relevant auditing standard, SLAUS, all the relevant auditing standards. Without following all these auditing standards, you are not in a position to deal with this opinion. You cannot. Therefore, you should follow all the relevant auditing standard. Who is asking you to follow this? SLAUS 200. SLAUS 200 required you to follow all the relevant auditing standard. Sometimes all the auditing standards are not relevant for each and every engagement, but wherever relevant, all the auditing standard you should follow in giving this opinion. So there's one of very important standard, SLS 200, which is the objective for explain or objective of auditing, and it covers all the auditing, all other auditing standard as well. So that standard required you to follow all relevant auditing standards in achieving this final goal of giving opinion. So all this relevant standard we can divide into 3 areas. One is one area we can say audit planning. Audit planning. All relevant auditing standard, one category we can identify as audit planning. Other category, evidence gathering. Evidence gathering. Some standards are relating to evidence gathering series. So basically 500 plus series. Here 300 plus series relating to audit planning. And finally, reporting related standard. Reporting series. So here we can say 700 series. So all relevant auditing standards we can categorize into these 3 areas: planning related standard, evidence gathering related standards, and reporting related standard. Today I am going to cover basically audit planning related standards. Planning related standard, there are 4 basic standards: SLA US 300, 315, 320, 330 and 320. So these are the basic audit planning related standards. When it's come to audit evidence gathering, SLA US 500 is the basic planning standard. Then we have so many standards: 570, going concern, 540, 560, right? 550, external confirmation. Likewise, so many standards. There are some more. I can't write everything here. I write few important standards here. And 510, auditing special elements, right? And audit planning related standard, starting from 700, 705, 706, 701, likewise. Basic audit planning series, audit reporting standard. 705 means modified opinion. 701 CAM, key audit matters. 706 means emphasis of matter and other matter, likewise. So here standard asks you to plan the audit properly, then gather audit evidence. Based on audit evidence, finally form your opinion through reporting related standards. Before you come here, another important standard says SLA US 450, SLA US, SLA US 450. This standard asks you to evaluate material misstatements. You will identify some of the fraud or errors when you apply audit procedures on the financial statement. We identify them as material misstatements. So first you evaluate material misstatement. If misstatements are material, you have to consider that for opinion forming. If there are no material misstatements, so then you will issue unmodified opinion. If there are material misstatements, you will issue modified opinion. So that's how we can structure our audit universe. On top of this, right, you may have to follow audit quality, and you have to apply what do you call, you have to comply with general principles of auditing, professional skepticism, professional judgment, and code of ethics likewise. And you have to learn assurance engagement. So these are the other topics that you need to learn. And on top of this, you have internal controls over business processes. So these are additional key topics that you should learn together with this journey. Right? Fine. So this is the holistic view of auditing process. I can say this is the auditing process. Today our primary focus is to cover audit planning together with one past paper question. Right? Fine. Done. So that is the basic introduction to the today's session, as well as for the subject, I would say. Right? Fine. So with this, we'll focus on audit planning. Okay. Done. So let's go to Again, I hope you all can see this screen. Right? I'm going to start audit planning now. Before we jump into planning, another important thing you should understand. What are we auditing? You all will tell me we are auditing financial statements. Correct. But remember, we are technically speaking, we are not auditing financial statements. What are we auditing? We are auditing financial statement assertions. One of the another golden word I would say, in auditing. If someone asks from today onwards, what are we auditing? We are not auditing financial statement. Indirectly, yes, we are auditing financial statement. Let me explain you. But technically, we are auditing what? Financial statement assertions. If someone asks from you, Machan, what do you mean by financial statement assertion? Tell them it is the management representation. Management representation? What is management representation? The average people will not understand this. Only you can understand. Let me explain what is management representation meaning. Financial statement assertions, we can divide into 3 categories. As of now, you know all about this. Even from business level 2 or CAB or from previous syllabus, at second stage of your chartered journey, there's a subject, process, business process or audit or control, something like that, right? In that also these were explained, right? All these financial statement assertions we can divide into 3 levels. One level we call it as transaction level. There are certain assertions come under transactions. Some assertions come under accounts balance. I have conceptualized it for your benefit, right? Some assertions we can classify it under account balance level, and some of the other assertions can classify it under presentation and disclosure level. There are 3 levels. What are they? Transaction level there are assertions, account balance level there are assertions, and presentation and disclosure level. Under these three levels, assertions we can classify. Assertion means management representation. That's what we are going to audit. Now I'm going to relate these assertions to financial statements. Where you can find transactions. Remember, transactions we can find in our P&L, profit and loss. It is very simple for us to say profit and loss, but the right word of this what? Profit and loss and other comprehensive statement. Statement of profit and loss and other comprehensive. Right? And all account balances we can see. Balances means there is carried forward, brought forward balances. Right? Balances we can see in our balance sheet and in our cash flow statement. Cash flow statement means your cash position. End of the year, closing cash balance, you reconcile from opening to closing in which statement? Cash flow statements. Changes in equity, shareholders' wealth, from opening to closing shareholders' wealth, equity, you will reconcile where in changes in equity statement. So all these three statements, if you look at, you can see carried forward balances. That's why we say those come under account balance level assertion. And presentation and disclosures where you can see in our notes. Now all these component of financial statements I have categorized under transactions, account balances and presentation and disclosures. P&L mean transaction level, balance sheet changes and equity and cash flow statement means account balance level assertions. Finally, notes means presentation and disclosure level. So three levels of assertion I link to components of financial statements. Not only that, another relationship we can build. We can build a relationship between level of assertions and component of financial statement and those two to what? Elements of financial statements. How do we build that link? If you take P&L, in P&L, what we can see, income and expenses, two elements of financial statement. There are five. Out of five, two elements are what? Income and expenses. Income and expenses we can see in profit and loss account. And asset, liabilities and equity, where we can see, those we can see in balance sheet, cash flows and changes in equity. So these elements of financial statements we can relate to relevant component of financial statements, and that will build another relationship to what? Level of assertions. Three levels of assertions, component of financial statements and elements of financial statements. This relationship you must understand. Now you can say, yes, we audit in financial statement because this is financial statement, balance sheet, P&L. So we say we audit in component of financial statement, but technically remember, we audit in what? Financial statement assertion. Actually, these are not assertions. These are level of assertion. Then what is the real assertion? What are the real assertions? Here you can see the real assertions. If you take P&L, income and expenses, or else transaction level assertion, we can see there are 6 assertions. Completeness, occurrence, accuracy, cutoff, classification and presentation. There are 6 assertions. How should we learn this? Or what is the meaning of this? I told you, financial statement assertion means management representation. How do we explain this? Let's take completeness. Management is telling auditor, look here auditor, all the transactions that are reported in P&L, meaning income and expenses, are completed. Completed means all the transactions should have been recorded, have been recorded. Should have been recorded, have been recorded. That's what their representation. all transactions should have been reported, have been reported, have been recorded. That's their representation. If it is not the case, let's say there are certain transactions should have been recorded, have not been recorded. Let's say impairment. There are impairments, but impairment loss has not been recognized. Should have been recorded, have not been recorded. Meaning, there is always risk of having material misstatement. What do you mean by material misstatement? Fraud or error relating to these assertions. If there is a deviation from management representation, what management is trying to tell, or what management has stated is the representation. If there is a deviation from that, it's called what? A risk of material misstatement. If there is anything go wrong relating to management representation, we'll end up with what? Risk of material misstatement. That's how you should learn. Right? Occurrence. Occurrence. Occurrence means what? Occurrence means all transactions that have been recorded, have occurred, hatagatta, ඇතිවුණා business එකේ, and pertain to the entity. Entity එකට අදාළයි. Occurrence means that pertain to the entity and occurred. Let me give you an example. Always we should learn these things through examples. You have delivered goods to your customer but not yet invoice. Let's say in other way, you have invoiced to your customer and record sales in your general ledger as a sale. But goods are still in your warehouse, at your warehouse. Goods are not yet handed over to the customer. You have not handed over to customer, right? Goods are still at your location. But you have invoice and recorded as a sale. You have recorded transaction sale, but that has not been occurred. Why? SLFRS 15 says for you to recognize revenue, risk and rewards, control over goods sold. Control is very important word. Control should have been passed to your customer or buyer, but still goods are at your warehouse. Therefore, you have recognized revenue, but it's wrong. You cannot recognize revenue which is a departure or non-compliance or risk. It's a misstatement. Why? You have recorded transaction, but that has not been occurred. That's what you need to understand. That's how you should audit. You have to, that's why I'm saying, you're auditing these things. You're auditing management representation. They are saying all transaction occurred. But when you audit, when you perform audit procedures, you have identified that certain transactions you have recorded, but those transactions have not been occurred. Non-compliance with that. Accuracy, very simple. Amounts that you have reported should be appropriate and accurate. Appropriate, accurate numbers you have reported. Cutoff, very important. Cutoff means, let me explain. Cutoff. Sorry.
Rats, I can't hear you.
Sorry. Cutoff. Cutoff means, now let's say, this is the year-end date, 31st March, let's say 2024. So this is the cutoff date or year-end. You have invoice, some of the invoices here, right? Sales invoices, but goods are still at the warehouse. So examiners normally test in cutoff assertion. Examiner has tested more time, that's why I'm explaining this in detail rather than other assertions. Goods are still at warehouse, meaning control retained with you. Still control is with you, but you have create sales invoices and record sales. It's a non-compliance with cutoff because on this date, 31st March, there is no sale transaction happens. Actually, you cannot recognize revenue before 31st March. Sometimes these goods will be delivered, let's say 4th April 2024. So then these invoices belongs to 24-25 financial year, not for 23-24 financial year. That's cut off. How do you audit cut off? Normally you take all invoices, let's say, or invoices, all invoices raised close to the year end, maybe from 25th March to 31st March, and see when you have delivered goods to your customer. If still goods are not delivered to customer, non-compliance is cut off. Similar to this, let's say you have received goods 31st March 2024 purchases, right? But GRN happens somewhere in 1st April, let's say 2024. So inventory you have recognized somewhere here. Inventory. Meaning, actually this inventory should have been recognized in this financial year, 2023-2024 financial year, rather than 2024-2025 financial year. Since system activity, which is GRN, happens on this day, inventory has been recognized for this financial year, which is wrong. Actually, this should have been recognized in this financial year. Because you have received goods prior to this date. You have accepted goods prior to this date. But system GRN happens somewhere here, which is wrong. Inventory should come here. That is cut off. That's the cut off. Right? Fine. Right. That's cut off. Let me erase this first. This understanding financial statement assertion is really important for me to continue the rest of the journey, right? Rest of the session, basically, right? Fine. Okay. Coming back to this, that is cut off. Classification. Classification means you have transaction and account balance. Transaction, meaning income and expenses, you have recorded in the correct chart of accounts. Salary is there in salary account. Depreciation there, sorry, depreciation account, right? You have not taken depreciation into salary or electricity. Your ultimate profit can be correct, but if classification is wrong, your analysis, your final decisions can go wrong. Presentation, you have presented this properly in the financial statement, income, expenses, and administration expenses under administration, sales expenses under sales category, and finance expenses under interest under financial expenses. So likewise, presentation is in line with LKS 1, required accounting standard. So these are the financial statement assertions come under transaction level. So auditor's duty is what? Auditor's duty is to check management representation. What management is talking about or telling about this assertion, whether it's right or wrong, whether risk of material misstatements are associated with this or not. How do we do it? Let me explain later. When it's come to account balance level assertions, right? Account balance level assertions. Again, you can see some similar assertions applicable for transaction, also applicable for account balances. But let me explain other assertions. Existence. Existence you can't see under transaction level, but you can see under accounts balance level. Why? Why it is specific to account balance level? Existence means at the year end, there is a balance exist for all balance sheet account balances. So these balances are exist. If you are saying there is 10 million worth of inventory, yes, physically 10 million worth of inventories there exist. It can't be 5 million. Then it's something wrong. How do you audit this basically? When it's come to inventory existence, how do you audit? Physical stock verification. So you download system report from your ERP system, stock report, and with the team you go to warehouse and count one by one and see whether system mentioned quantities are physically appears, physically exist. That is called existence. Let's say debtors, how do you audit existence? You call external confirmation to see whether the reported debtors are actually exist or not. That's the way you audit, right? Completeness, we were talking about this assertion under transaction level also. All accounts balances should have been recorded, have been recorded. Should have been recorded, have been recorded. Right? Valuation and allocation, which is not applicable for transaction level, but it is applicable for accounts balance level. Valuation and allocation. Now let's say WTC building. Right? Very good example. What it is for WTC company? It's a company. All these floors they have rented out in their balance sheet. All these floors come under property, plant and equipment or investment property. That is investment property, IP. LKS 40 says investment property should be valued under cost model or fair value. If it is fair value model, you have to value these buildings, these apartments that are rented out to other party, third parties, according to SLFRS 13, valuation, fair value standard, right? Have we valued according to those standards? Valuation. Let's say debtors. How do you value debtors? IFRS 9, SLFRS 9, debtors impairment. Let's say you have 100 million worth of debtors in your balance sheet. That is not the real value of debtor. You have to calculate risk associated with, collection risk associated with that debtor, which is called impairment, and deduct impairment, then the real value of debtors you can take. Likewise, all the balances you have to value properly, and if there is a liability, you have to allocate that properly. Right? You have to recognize relevant liabilities, obligations, right? And valuation and allocation for asset and liabilities. Rights and obligations, that is also specific to account balance. Rights means if it is an asset, you have rights to control or you have rights to receive economic benefit out of that asset. Rights. How do you audit rights? Basically, let's say property, plant and equipment. How do you audit rights? Deed of the land, vehicle. Do you have rights to earn cash, earn economic benefit from vehicle? How do you audit? Review revenue license or vehicle registration book. Obligations. All liabilities are obligations of the company. You have obligation to settle. Lease agreement. Creditors, supply invoices. Those are the obligations. Classification, again we went through under transaction level also. Properly accounts balances are classified into real chart of accounts. And in balance sheet also, there should be proper presentation, non-current, current classification, right? And long-term, short-term classification. Properly you must present in the balance sheet, right? And when it's come to presentation and disclosures, you can see occurrence and right and obligation, completeness, classification. And another new one is the understandability. You should prepare properly in a way that everyone can understand properly. So understandability. So these are the assertions that we must audit during the course of audit. Basically, we are auditing this. We are auditing completeness, we are auditing occurrence, we are auditing accuracy, we are auditing cutoff, we are auditing classification. We call it as pack cover. Pack cover, right? So that's what we are auditing. P means presentation, PA, pack. So let me write it here. Sorry. Sorry. Pack. Pack cover, right? P means presentation, A means accuracy, 3 C's classification, completeness, and cutoff, and O means occurrence, V means valuation, E means existence, R means right and obligation. So PACCA is the short form of keeping this assertion in your mind. So basically, what is the learning outcome here? We are auditing what? Financial statement assertion. There are 3 levels of assertions. Assertion means simply management representation. What is management view on this? Auditor's duty is to see whether there is any risk of material misstatement associated with this management representation. In other words, assertion, if you identify it, remember we identified at assertion level risk. We are going to discuss that later, right? Fine. Now you know we are auditing pack cover, right? Fine. So that is one basic thing you should understand prior to we jump into this key standard. Another important point I am trying to explain, audit risk. Another or second elements of or second point of my today's session. Second key element. Number 1, financial statement assertion. Then audit risk. Student, you must understand, I can't just jump into SLAS 315 without explaining these things. This is a part of SLAS 315. Audit risk is a part of SLAS 315. Actually, I have started explaining SLAS 315, but I have take audit assertion, financial statement assertion, audit risk, and audit procedures out from those relevant standards because I wanted to explain you as those as separate topics, right? First, we have covered financial statement assertion. Now let me take audit risk. Quickly we will go through this because this is not a theoretical session. This is revision session focusing on your exam. Therefore, I can't spend some more time to explain these things in very detailed version, right? Form. Audit risk. Again, this is not difficult, right, to understand. If someone asks what is audit risk, you can tell the risk that auditor express an inappropriate audit opinion when financial statements are materially misstated. You can see I have highlighted certain words in red. I'll tell you the reason. Express inappropriate audit opinion. Normally, if you are in physical class, I can test your knowledge, but virtually it's very difficult with this limited time. Express inappropriate audit opinion when financial statements are materially misstated. I can give you 4 scenarios. So students will tell this as an answer if I ask what is audit risk. But I can tell you 99% of you are answering without having proper idea in your mind. I can prove it. Let me prove, right? Look at this, right? Look at this. For that I mean answer I will highlight. I will okay, anyway. Look at this example since I don't have any way of asking questions. Take this scenario. What is audit risk? Auditor express inappropriate audit opinion when financial statements are materially misstated. Auditor express inappropriate opinion. Opinion. Opinion can be four types. Financial statements are true and fair view. One. Second, financial statements are not true and fair view. Again, same thing you can repeat. Financial statements are true and fair view, not true and fair. There are basically two. Two, no? Right? Financial statement either true and fair view or not true and fair view. When you say financial statements are true and fair view, material misstatement, yes. You are saying financial statements are true and fair view, but there are material misstatement in the financial statement which you have failed to detect. You have failed to detect material misstatement. There are material misstatements. But you are saying financial statements are true and fair view. Audit risk? Yes. Your opinion is not appropriate. You are saying true and fair view. But material misstatements are there. Remember, only this scenario you can see audit risk. Only this scenario. There are four scenarios. You can see audit risk in this scenario. Why? Your opinion is not appropriate. Bad. You are saying financial statements are true and fair. උඩ බලාගෙන කියන audit මොකුත් කරලත් නැහැ, procedure perform කරලත් නැහැ. කම්මැලිකමට financial statements are true and fair view. But if you really look at, there are material misstatements. You are at a risk. You are at a risk. Audit risk means auditor has a risk. Why? You are saying true and fair view, but material misstatements are there. Second, you are saying financial statements are not true and fair view. There are material misstatements. If there are material misstatements, yes, of course, financial statements are not true and fair view. Then there is no risk. Auditor doesn't have any risk because you have given proper opinion, appropriate opinion. But to have audit risk, opinion should be inappropriate. But here opinion is appropriate. Opinion is appropriate. Why? Financial statements are not true and fair view. At the same time, you can see material misstatements are there. Yes. There is no audit risk. Third scenario. Financial statements are true and fair view. Satyaha sadharanai. Financial statements are true and fair view. There are no material misstatements. If there is no material misstatement, yes, financial statements are true and fair view. There is no audit risk. Fourth scenario. Financial statements are not true and fair view. Opinion. No material misstatement. How do you say financial statements are not true and fair view? Actually, there are no material misstatements. Because just you can't deliver an opinion without evidence. If management asks, auditor, tell me why you say, how do you say financial statements are not true and fair view? Then auditor, how can I answer? Yes, because there is no material misstatement. This scenario is not possible in audit. Because auditor doesn't have any audit evidence to say financial statements are not true and fair view. Remember, out of these four scenarios, auditor can see, or else auditor has a risk in under first scenario only. Most of the students are answering here also as audit risk. Because auditor is saying financial statements are not true and fair view when there are no material misstatements. But it's wrong. There is no possibility here. Right? Remember. Then, to have audit risk, your opinion must be, this is a short form of keeping this mind. Auditor must deliver true and fair view opinion. At the same time, there should be material misstatement. Then only you can see audit risk. Here, something wrong with auditor. That's why there's a risk to auditor. When financial statements are with material misstatement, you are still saying financial statements are true and fair view. Okay, coming back to this. තේරෙන්නේ නැති එක්කනට explain කරොත් කොහොමද කියන්නේ? Audit risk කියන්නේ මචං auditor කියනවා financial statements are true and fair කියලා. ඇත්තටම true and fair value කියන්නම ඕනේ audit risk එකක් තියෙන්න. audit risk එකක් එන්න නම් you must say financial statements are true and fair value. ඒ කියන ගමන්ම there should be material misstatement. මේ auditor express inappropriate opinion. True and fair value. When material misstatements are there? When financial statements are materially misstated. Material misstatement තියෙන්නත් ඕනේ. Opinion එක true and fair value වෙන්නත් ඕනේ. ඒ කියන්නේ material misstatement තියෙයිද true and fair value කියනවා. ඉතින් වැරදි. Then auditor has a risk. This audit risk can divide into two elements, two categories. One is risk of material misstatement, very familiar sentence for us. Risk of having fraud or errors. Risk of material misstatement or detection risk. Let me explain this first. Risk of material misstatement means risk of having fraud or errors. Always remember there's a risk of material misstatement, risk of having fraud and errors or fraud or errors because of one reason, lack of internal controls. Always risk of having fraud or errors are there because of lack of internal controls. That can be divided into two categories again. Inherent risk and control risk. Inherent risk means inherently embedded risk. Assuming, how do you explain this? Inherent risk. Examiner will never ask you to write the definition of inherent risk, but that is important to understand. That understanding is really important. How do you understand this? Risk of not having internal control. That's a simple definition for me. Risk of not having controls, inherent risk. Let's say you don't know the word no, I have highlighted in red. No, bank reconciliation. You don't prepare bank reconciliation. Inherently, there is a risk of not matching your bank balance with your bank statement balance. You don't do three-way match. Just you pay for invoices. Whatever the invoice supply sends, you make the payment without three-way match. There's a risk, inherent risk of paying for wrong invoices, for wrong amounts. Stock verification, no stock verification. There is an inherent risk of not identifying damaged stock, expired stock, or destroyed stock. Inherent risk is there. Let's say valuation of WTC. Fair valuation, it's an estimate, judgment. Estimates, judgments are there's inherent risk. Because estimate means what? It's an measurement since in the absence of precise mean of measurement. It's an estimate. Fair value means it's an estimate in the absence of precise mean of measurement. Hari ක්‍රමවේදයක් නෑ. By using assumptions, condition in the economy, you value WTC. Let's say same building is there in Monaragala. Can you value at the same? No. Infrastructure availability, density, right? And other economic factors you have to consider when you value a building. All these things are assumptions. So valuation of WTC, investment property fair value, there's inherent risk. Inherent risk. Right? So that is inherent risk. Risk of not having proper internal controls. Control risk, meaning control is there, but controls are not work effectively. In other words, through these internal controls, material misstatements will not detect, prevent, or correct on a timely basis. Example, bank reconciliations you prepare. Simple example I am taking. Bank reconciliation you prepare, but no one is reviewing. The person who is preparing just prepare and file. No one is reviewing why there are unpresented checks, unrealized check, why there are errors, no one is reviewing. You perform stock verification, no one is reviewing or adjusting the differences that you have identified. Controls are there, but not work effectively. Not work effectively. Another example, let's say payroll, we'll take payroll. Payroll reconciliation is available in the system, but no one is reviewing. No one is reviewing. Controls are there, but no one is, controls will not detect, prevent, correct material misstatements. Let's say CCTV camera fix, control is there. No one is regularly reviewing whether this is working or whether recordings are capturing. No one is looking to that. If some incident happened, only you will identify, CCTV camera is not working, there are no recordings, recordings are not stored in hard devices, like that. Control is there, but control failed to detect, correct, prevent material misstatements on a timely basis. That is the two elements, two component of risk of material misstatement. Because of these two, there's a risk of having fraud or errors. Third element of audit risk is what? Detection risk. Auditor failed to detect material misstatement through his audit procedures. In other words, auditors' audit procedures are not effective. Auditors' audit procedures are not effective. Auditor කම්මැලි. Auditor audit procedures, traditional audit procedures. ගිය අවුරුද්දේ ෆයිල් එක ගත්තා බැලුවම right. bank reconciliation ආය reperform කරලා තිනවා අපිත් reperform කරා. Expenses ටිකක් vouch කරලා තිනවා same expenses you vouch. You have not performed risk-based audit procedures. You have not identified risk of the business. You just for the sake of performing audit procedures, you have performed some traditional audit procedures. Those are not effective. When your audit procedures are not effective, your audit procedures are not focusing on the risk of the business, traditional audit procedures, you will not detect these misstatements. So that is the third function of audit risk. So considering these audit risks, three functions of audit risk, we can prepare, or we can have this formula to calculate audit risk. It's a logical formula. Audit risk equal inherent risk into control risk into detection risk. How do you explain this audit risk formula or equation to someone else? Let's say in an organization, controls are not there, internal controls are not there, meaning there is inherent risk. Bank reconciliation not preparing, no proper controls or evaluation, no three-way match, no physical stock verification, no segregation of duties, control is not there. Then inherent risk is high. You can see, inherent risk is high. Obviously, normally, generally, when inherent risk is high, control risk also obviously high. That's a relationship. So let's assume inherent risk also high, control risk also high. One side of the equation is going up, definitely other side also going up. Red going up. One side is going up, audit risk also going up, increasing. Auditor's intention is not to increase audit risk. When increasing audit risk, that has impact in opinion. Auditor at a risk. Auditor will deliver inappropriate opinion when financial statements are material misstated. Why? There's a risk of having material misstatement. Why? Inherent risk and control risk is at a high level. In this organization, controls are not working effectively. Your controls are not there. You're auditing high risk client. When you're auditing high risk client, why I'm saying high risk client, inherent risk also high, control risk also high. Obviously, audit risk is high. Most probably you will end up with giving inappropriate opinion, meaning you will say financial statements are true and fair view while there are material misstatements. That's the risk. Can we reduce these two, inherent risk and control risk? No way. It's beyond the control of auditor. Can auditor push Can auditor correct? Can auditor touch? Or can auditor go and implement proper internal control? No. Operational controls, financial controls, compliance control. These are the three categories of internal control. Who is designing? Management. Who is implementing? Management. Who is monitoring? Management. So inherent risk, control risk is beyond the control of auditor. Auditor can't do anything. But auditor can't sleep. මට මුකුත් කරන්න දෙයක් නැහැ. I don't have control of inherent risk and control risk. මට දන්නේ නැහැ audit risk එක වෙන්නවට. No. Auditor can't tell that. But one element that auditor can control, what is that? Detection risk. ඒ වෙලාවට auditor නිදාගෙන ඉඳලා අර traditional audit procedures ටික කරලා ගිය පාර audit file එක බලලා ඒකේ තියෙන දේම කරලා නැත්තම් සීනියර්ස්ලා කියන එක ඒකම කරලා මොකද ස්ටඩි ලීව් යන හදිස්සි ටග්ගල ඔඩිට් එක ඉවර කරන්න ඕනේ තියෙන ඔඩිට් ප්‍රොසීජර්ස් මොකක් කරයක් කරා ගියා finally true and fair view opinion misstatements are there no in this scenario you can't do it any scenario you can't under any circumstances you can't do it but here you are at a risk your inherent risk is high your control risk also high. Now auditor has to be careful. You have to reduce. You have to take this detection risk down. Then one part of the equation come down. Audit risk also will come down. Remember, there's only way to reduce audit risk is to reduce detection risk. There's no other way of reducing audit risk. Remember, because inherent risk and control risk beyond the control of the entity because you can't touch company's internal controls. You can't touch design, you can't challenge, you can't implement internal controls. Only thing you can perform is to, only thing you can do is perform effective audit procedures to reduce detection risk, then you can reduce audit risk, right? That is how you explain audit risk. Simply, audit risk means audit express inappropriate audit opinion when financial statements are materially misstated. Statement number 1. What is audit risk formula? Inherent risk into control risk into detection risk. I explained these three definitions. Normally, when inherent risk and control risk is at a higher level, audit risk also obviously high. Because one part of the equation going up means other part also going up, other side also going up. Inherent risk and control is beyond the control of auditor and only detection risk can be controlled. Therefore, to reduce audit risk, you must reduce detection risk. How do you reduce detection risk? The way of reducing audit risk. Only way to reduce audit risk is to reduce detection risk. How do you reduce detection risk? This is the answer for exam question. Planned audit will. Now, hey, now you have to plan the audit properly. You have to identify real, correct risk of material misstatements. Assignment of more experienced personnel. You allocate senior, expert, qualified people to audit. Apply professional skepticism. Being alert, questioning mindset. හැම මිනිහා දිහාම හොරෙන් බලන්න එපා. කැන්ටින් එකේ තේ හදන මිනිහත් හොරා, සිකියුරිටිත් හොරා, පෙටි කැසියත් හොරා එහෙම නෙමෙයි. Be alert, use questioning mindset as and when appropriate. Apply professional skepticism throughout the audit to reduce detection risk. Increase supervision. ඉස්සර නම් සතියකට එක සැරයක් තමයි ඔඩිට් එක සුපර්වයිස් කරේ. ඔක්කොම මාසෙකට එක සැරයක්. නැත්නම් ඔඩිට් එක ඉවරලා ආපහු. No. Maybe daily or multiple times in a week throughout the audit. Focus supervision must be there. Increase sample size. එකක් දෙයක් check කරන්න එපා. Now you have to increase sample size. When you increase sample size, you will identify more material misstatements. When you identify more material misstatement, you can reduce audit risk. If after applying these things, if you identify so many material misstatements due to lack of internal controls, you can say, look here management, those charged with governor, your financial statements are not true and fair view. Then you are not at a risk. Those charged with governor will ask, how do you say, look here, I perform audit procedures very well with a plan. I apply more experienced personnel. I ask them to use professional skepticism. I increase supervision. I increase sample size. The result was end up with more material misstatements. Because of those evidence, I'm saying financial statements are not true and fair view. Then you are not facing to audit risk. So that is the second element of my session today, right? I'm jumping into third element for the interest of time, right? So audit risk also part of, I'm explaining what? SLS 315, right? SLS 315. Identify and assessing risk of material misstatement through understanding the entity and its environment. That's what I'm explaining. Now let me take another element of that standard out and give focus understanding or to continue focus session, right? What is that? Audit procedures. Another important. I recommend you to review your past papers, right? And check how many times this word, red word is repeating. I can show you, right? I just take question number, let's say question number 7, right? Question number 7, the random selection. Outline the action auditor should take on matters observation identified upon completion of the audit of Neon. Okay, outline the actions. Second one, assess you agree with the audit team's statement regarding CAM. Outline the procedures. Procedures, that's what we are talking about. Procedures. There is no audit in paper. If you can find it for me. There is no audit in paper without this word. For 3 marks, examiner want you to write audit procedures. That's what I am going to explain now. Second part, D, analyze threat. That's not important. Important, but yeah, we'll take another question. You plan to perform substantive analytical procedures for 5 marks, now 8 marks. This is the recent paper. The word procedure has tested for 8 marks for the time being, right? Question number 5. To write 2 audit procedures, now 10 marks. From the word procedure I am explaining. Discuss appropriate audit conclusion. Can't see that. We'll take another, now for the time at 10. Question number 4. Select 5 controls, identify 5 corresponding elements, outline 5 actions. Okay, there is no word procedure, we can find there. Question number 3. Assess the impact of above scenario into data's provision, report, fine. The word, I'm always focusing on the word procedure. Right? 3 difference you expect to observe when you compare audit report, that is audit report. Let's take question number 2. Advise the team on appropriate overall response to address the risk. Indicate scenarios performing more fine. Noted that you have significant action in investment properties. Valuation report, fine. Outline or fine. Indirectly you have to write some write audit procedures for other questions also, but directly for 10 marks your examiner has tested this word, audit procedures. තව බලන්න papers අරගෙන. Minimum 10 marks will be tested, will be there. 10 marks question minimum will be there in your paper with this word, audit procedures. Specifically, you can see this in question number 6 and 7. Audit procedures. So, you are going to learn such a wonderful golden topic. මෙතන පොඩි mistake ටිකක් කරනවා students you. Right, let me explain those mistakes as well as let me explain how to properly manage this question audit procedure. මොකද ලකුණු 10ක් මේක හරියට ඉගෙන ගත්තොත් very simple to earn those 10 marks. Okay. In this audit universe මේ audit universe එකේ තියෙන්නේ two type of audit procedures basically. All audit procedures we can divide into two categories. Two categories. What are those categories? One category we can identify as RAP, Risk Assessment Procedures, in short form RAP. Another category we identify as FAP, Further Audit Procedures. කෑලි දෙකයි. Risk Assessment Procedures and Further Audit Procedures. Risk Assessment Procedure මම මේ හරිම සරල ක්‍රමයකට කියලා දෙන්නේ හරිම ලේසි මේක මේ විදිහට ඉගෙන ගන්න you will definitely I can assure out of 10 or 15 80% of the marks can be taken, but you have to be smart enough. Risk assessment procedures, don't try to cram මේක කටපාඩම් කරන්න එපා. Risk assessment procedures, someone asks the procedures you perform to identify and to assess the risk. මොනවද ඔඩිට කරන්නේ to identify and assess risk come under risk assessment procedures. Simple. The name itself giving the definition. Risk assessment procedures. The procedures performed to assess the risk. The outcome of these procedures. Oh, let me before come there. So you can ask from me, so tell me then, what are the procedures you perform to identify and assess the risk? Basically, these are the procedures, or these are the nature of audit procedures. You can see 6 natures of audit procedures. I will come to that later. Inquiry, inspection, observation, recalculation, reperformance, analytical procedures. Remember, auditor can collect sufficient appropriate audit evidence, or auditor can identify and identify risk by performing only these 6. Either through inquiry, either through inspection, either through observation, recalculation, reperformance, analytical procedures. These are the real audit procedures or nature of audit procedures to collect sufficient appropriate audit evidence. So out of these 6, what are the procedures we can use as risk assessment procedures? Or what are the procedures that we can use to assess the risk of material misstatement or to identify risk? Inquiry, yes, it's a risk assessment procedures. Inspection, yes, you can use inspection to assess the risk. Inquiry means you ask questions, you question management, you question from those charged with governor to identify the risk. Ask questions. Inspection, you inspect physically, you inspect stock, you inspect document, you inspect agreement to identify the risk. Observation, you go and observe. Kelang hoino again? You go and observe. Observation means you observe the things that others are performing. You go and observe. Stock verification, you don't count. You go and observe. Management is counting. You go and observe whether proper instructions are following, whether stickers are pasted after counting. Likewise, you go and observe whether the things are happening according to the given instruction. Recalculation, reperformance are not risk assessment procedures. Remember, analytical procedures you can use as risk assessment procedures. You analyze numbers, you analyze trend, you calculate ratios, you check the reasonableness of transactions. Analytical procedures. I'll explain in little detail later, but for the time you understand. 1, 2, 3 and 6 you can use as risk assessment procedures to assess the risk. කවුරු අහන්න බලන්න. ඉතින් මොකද්ද මේකේ outcome එක? That is important. The outcome of risk assessment procedure is the golden phase of auditing or golden word of auditing, which is risk of material misstatement. The outcome when you apply audit procedures, inquiry, inspection, observation, analytical procedures to assess the risk or to identify the risk, to identify risk, the outcome is what? Risk of having fraud and errors, fraud or errors. මෙතන පොඩි mistake එකක් කරනවා. මෙතන හිතන RI. මෙතන තියෙන හොරා සහ වංචා. No. Risk of having fraud or errors. Right? Risk of having fraud or errors. Not the actual not the actual fraud or errors, risk of having fraud or errors. Very important. I'll explain why it is. That risk මේ වෙලාවේ ළමයි අපි දන්නේ fraud එකක් හරි වංචාවක් හරි තියෙනවද කියලා. මොකද අපි කරේ inquiry, inspection, observation, analytical procedures. By performing those things, outcome reveals that there is a risk of material misstatement. Let me explain a simple example. You ask questions from management. How bank reconciliation process is, how cash management process is happening. One person is there to collect cash, same person is updating cash book, same person is updating sales book, same person is deposit cash at the bank at the end of every day, same person is preparing bank reconciliation and file. The end-to-end cash management process handled by one person. Can you say, Muhorek, definitely there are errors, definitely frauds are there? No, you can't say. But what you can say, there's a risk of having material misstatement. Why? No segregation of duties. One person is managing end-to-end process that indicate there's a risk of having fraud or errors. One person is managing end-to-end process. අනිවාර්යෙන් වූ හොරෙක්. Definitely errors තියෙනවා. Definitely frauds තියෙනවා. No, you can't say. That's why always remember the outcome. The outcome of risk assessment procedure is what? Having risk of material misstatements. That risk can be high or low. That is the assessment. 315 says what? Identify risk and assess. Your assessment is some of the risk can be high, some of the risk can be low. Bank reconciliations are prepared, but no one is reviewing. At least you prepare. You can say it's a low risk because someone is preparing. But let's say bank reconciliations you don't prepare and no one is reviewing. There's nothing to review. Then risk is high. Stock verifications are not happens. Risk is high. Stock counts are happening, deviations also adjusting, but no one is reviewing, no one is reconciling properly, no one is approving those. Then risk is low. Likewise, you have to assess this risk because this assessment is really important for you to respond to this risk. Identify and assessing risk of material misstatement. Basically, risk assessment procedures you perform as a part of 315 standard. Here, I'll come to this later. Once I explain audit procedures, it is easy for me to explain 315 standard. 315 standard, I'll come to that later, right? So basically, this is 315. Identify and assessing risk through risk assessment procedures. Here, the outcome is high risk or low risk. High risk means significant risk. What is significant risk? I'll explain. Why this assessment is important for us to responding to this risk. Responding to risk is what? 330. Another diagram is there for that. Here. Sorry. Responding to assess risk. To respond to the assess risk, we use further audit procedures. Further audit procedures. If I ask a question from you, there are two procedures, risk assessment procedure and further audit procedure. So what procedures you should perform first? මොන procedure එකක්ද අපි කලින් කරන්න ඕනේ? දන්නේ නැති මෝඩයෙකුට උනත් උත්තර දෙන්න පුළුවන්. Because this says further, තව දුරටත්. Then you should perform risk assessment procedures first. You perform risk assessment procedures first and assess risk. Based on this assessment, you select your next step. If the risk is high, significant, your further audit procedure should be substantive procedures, SP, when risk is at a high level. You can't just ignore or you can't rely on controls. You have to do some more. But if the risk is low, according to your risk assessment procedure, if the risk is low, standard says auditor can satisfy with what? Test of controls. Auditor can satisfy with test of controls. Here test of controls means auditor test effectiveness of internal controls that are designed and implemented by management. Audit is not going to design and implement. Audit is going to test the control, effectiveness of control. The word itself giving the definition. Test in control. Auditor test effectiveness of control and satisfy when risk is low. Risk low means internal controls are effective, internal controls are working properly, and because of internal control system is working properly, risk is low. Audit risk also low. Or audit risk equation formula to make apply කරොත් audit risk is low. Right? Audit risk is low. Audit risk is low, then you can test the effectiveness of internal control. How do you test? Check the segregation of duties. බලන්න segregation of duties හරියට තියෙනවද කියලා segregate කරලා. Check approval for sales invoices. Simple example. Sales invoice approval කියන internal control you check. Reperform bank reconciliation. Bank reconciliation හදනවා. අපිට reperform කරලා බලන්න. Perform physical stock verification. Sample select කරලා පොඩි stock count එකක් කරලා බලන්න. මේ controls හරියට වැඩ කරනවද කියලා. You just test the effectiveness of internal control. Whatever you do to test the effectiveness of internal controls comes under test of controls. Test of controls. So standard says when risk is at lower level, your further audit procedure can be test of control. You can satisfy with test of control. But according to a risk assessment procedure, if the risk is high, you can't just satisfy test of controls. You have to go for what? Substantive procedures. Substantive procedures. Substantive procedures are two types. Substantive analytical procedures, test of details. Substantive procedures means apply audit procedures for a transaction account balances and presentation and disclosures when risk is at a high level. You can't just depend on internal controls. You have to do some more analytics, do ratio calculation, do trend analysis, do reasonableness test. So these things we have to discuss in detail, but this is not the right time. But ratio calculation means you here GP margin, net profit margin, and see whether some unusualities are there. Trend analysis. Now let's say October, November, December, January sales keels. October 3 million, November 5 million, December 8 million, January 3 million. Ideally December sales should be higher. That's the trend because season. Reasonableness test. When capex are increased, let's say capital expenditure, PP, 100 million to 150, 50% increment. Depreciation also should have been increased, but here it's 9 million, which is not reasonable. When cost increase, your depreciation also should have been increased, but this is not the case. That's how you identify, that's how you use substantive analytical procedures when risk is at high level. Then test of detail, apply or test transaction account balances, presentation and disclosures in detail. Detailed testing of transaction account balances and presentation disclosure. What do you mean by detailed testing? Now let's say sales invoices. You should not check the approval for sales invoices. You have to perform detailed testing. Take invoice and see whether dispatch notes are there or not, whether proper sales order is there or not, right? And have we updated stock records when the sales happens? how accounting entry is passed, who is approving, at which point, detailed testing you have to perform, which is called test of detail, right? So that's the classification of audit procedures, right? In short, there are two types of audit procedures in this audit universe. What are they? Risk assessment procedures to identify and assess risk. Based on risk assessment you perform further audit procedures. It can be test of controls or substantive procedures. That's the classification of audit procedures according to SLS 315 and 330. Risk assessment procedures explained in SLS 315, further audit procedures explained in SLS 330. When it comes to those two standards, I'll explain. Right? Fine. This is the classification. But to collect sufficient appropriate audit evidence by applying audit procedures, always remember the outcome of audit procedure is what? Audit evidence. Audit procedures basically you do something. You do something. It can be risk assessment procedure or further audit procedure. That's fine. What do you do? Do something means you do this. What do you do? What you should do? Inquiry. You do inquiries, you do inspection, you do observation, you do recalculation, you do reperformance, you do analytical procedures. This is what you do. These are the real nature of audit procedures. Some of these can be risk assessment procedures, some of these can be further audit procedures. Basically recalculation, reperformance, those are further audit procedures. Inquiry, inspection, observation, those are analytical procedures. Those are what? Risk assessment procedures. You should remember to collect sufficient appropriate audit evidence through risk assessment procedures or through further audit procedures. This is what you should perform. This is the real nature of audit procedures. This is the classification of audit procedures. Fine. So audit procedures also we have done. Now 3 topics I completed. Financial statement assertions, audit risk and audit procedures. Audit procedure chapter එක අපි කතා කරා මොනවද? SLS 315 risk assessment procedure and how do you respond to that risk by using further audit procedure, which is SLS 330. Now let me quickly jump into audit planning. I'll not spend more time on this because we have to discuss one past paper question also. Audit planning, SLS 300. Now I have jumped into real planning standard. So this planning standard explain one core topic. I'll go to that core topic first, right? Otherwise this triangle, right? The wall of this triangle explain auditor's requirement. Auditor has to take involvement of key management personnel for planning, and auditor has to comply with preliminary engagement activities like quality control requirement, code of ethics, terms of engagement, and auditor should have proper nature, time and extent of direction, supervision and review process. These are the walls of this triangle. But inside of this triangle, which is called heart of the audit planning, the heart of audit planning explain two things. We call it as planning activities. There you can see OAS, overall audit strategy and audit plan. So this is the heart of this standard. I'll quickly explain this before I jump into SLS 315. Overall audit strategy means setting direction, scope, time and staff requirement of the audit. This is high level strategy. Direction means what are the high risk areas? WTC audit, fair valuation of investment property is the high risk area. Let's say now these days you are auditing construction company. Construction companies are stagnant. Even though import restrictions are removed, still construction industry has not boosted. Because of that, the revenue demand, asset impairment is high risk. That's the direction you should set. These days, people, they don't have money to pay their bank loan. When it's audit bank, non-performing loan impairment is high risk area. Direction. You set the direction for the audit. One part of our audit strategy. Scope. What is the scope of this audit? What are the applicable auditing standards? What are the applicable financial reporting standards? How many branches are there? Who are the key product of this group? And what are the key business component? What are the key geographical areas that they run the business? Scope of the client. All 40 odd accounting standard are not applicable for all clients. Let's say agricultural standard is not applicable for a bank. Sometimes investment property is not applicable for banks. SLFRS 9 auditing impairment or financial instrument is the key standard of bankers. So then scope, when you design scope, you must understand the relevant applicable financial reporting standard as well as auditing standard. That's the scope. You have to define the scope. Let's say you're auditing Single. There are so many, more than I think 100 plus branches across the country. Can you audit all 100 plus branches? No. How many branches? Which branches you are auditing? Scope you have to select. Timing. You can't just start audit and continue audit until end of next year. You have to decide based on the analysis. You have to check how long you invest to audit or to give audit report. Maybe 3 months, 4 months. Likewise, you have to decide the timing. Staff, how many people required and which kind of caliber is required to complete this audit? Do we need experts? Do we need tax expert? Do we need expert in valuation? Likewise, you have to identify real staff requirement with relevant competence. That is overall audit strategy. Audit plan. Audit plan means detailed version of overall audit strategy. If someone if I want to explain this, let me take whiteboard. Right. If this is overall audit strategy, this is audit plan. This is the detailed version of overall audit strategy. You detailed out overall audit strategy. There you have nature, time and extent of risk assessment procedure. What nature of risk assessment procedure? Whether inquiry, inspection, that is the nature or analytical procedures of risk assessment procedure. And how long, timing, how long you invest to perform risk assessment procedures, and to what extent, depth of audit procedures, to what extent you perform audit procedures, how many procedures you perform, that is a part of audit plan. Nature, time and extent of risk assessment procedures, and nature, time and extent of further audit procedures. Same. What is the nature of further audit procedure? Recalculation, reperformance of detailed testing, and timing of, and to what extent you are auditing. What extent, depth of audit procedures. That is the detailed version of audit plan. Basically, nature, time and extent of risk assessment procedures, nature, time and extent of further audit procedures. Timing, let me explain. Now let's say when you take timing of audit, nature, timing explain, I'll explain. Now let's say, how do you explain timing? Let's say 31st March 2024. This is the financial statement date. Right? Right? 31st March 24, financial statement date. I'm explaining timing. Let's say you have performed interim audit. Interim audit means after 6 months or maybe after 9 months. Yeah, let's say 30th September 2023. You have performed interim audit. You have done interim audit. meaning 6-month financial statements you have audited. Maybe simple audit procedures you have performed inquiry, inspection, observation, and analytical procedures. You have tested basically internal controls and you have identified high risk areas. High risk. So that's what you have done. 30th September. Then when it's come to this year end, you have to focus on the balance 6 month in detail. Because first 6 months you have already audited and identified high risk areas and it's a matter of further testing the risk. Then since you have done certain works, maybe within let's say 30th June, you can complete this audit. April, May, June, 3 months. 3 months, within 3 months period, you can complete this audit. But let's say there is no interim audit as such. Then you have to focus on first 6 months also. Then you have to extend this maybe until 31st August 2024. Meaning 5 months. Now the additional 2 months you have to spend. That is called timing. So if you have done interim audit, you can save the time and focus on balance 6 months and together you are auditing high risk areas of first 6 months. So that's you have to decide in your audit plan, right? Nature, time and extent. Time I explain here, right? Fine. So that is audit planning basically, right? That is the heart of this standard. Why this planning is important? Because of these reasons, right? It helps auditor to focus on high risk areas. Direction set in the in overall audit strategy. It helps auditor to identify, resolve potential problems on a timely basis. During the plan, you have identified high risk areas. You have set the direction, so then you can resolve the problems on a timely basis. You don't wait until the last moment to attain high risk areas. Help auditors to properly organize and manage the audit. You know high risk areas, you have identified relevant expert that you need, you have determined nature of risk assessment and further audit procedures, then it helps to organize the audit properly. Assist in selecting appropriate team members assigned to the work. Do we need expert? Do you need valuer, professional valuer? Do we need tax expert? Do we need a person to audit IFRS, SLFRS 9? It helps you to determine that. Facilitate the direction, supervision and review work. So it will facilitate direction and supervision work and review work. So this is the importance of planning. So just I wanted to touch the key or heart of the planning standard, which is overall audit strategy and audit plan. If someone asks what is overall audit strategy, overall audit strategy means setting direction, scope, timing and staff requirement for the audit. Audit plan means it is a detailed version of overall audit strategy. There you can see nature, time and extent of risk assessment procedures and further audit procedures. With that, let me touch on SLAUS 315. I don't want so many hours to explain SLAUS 315 because I have already explained. Because audit risk I explained, audit procedures also I explained, and financial statement assertion also I explained. Therefore, it is very simple for me to now explain SLAUS 315, which is one of the golden auditing standard under planning series. I just wanted only to explain the definition, that then you will understand the standard. Standard is very lengthy definition is there, right? What is that? Identify and assess a risk of material misstatement. No need to explain, now you know about it. Identify and assess in, how do we identify and assess in? Perform risk assessment procedures to identify and assess risk. What do you mean by assessing? Identify and high risk, significant risk and low risk. Identify risk through risk assessment procedures. What do you mean by risk assessment procedures? Inquiry, inspection, observation and analytical procedures. And assess. Assess means identify significant risk, high risk of material misstatement, of having fraud or errors. කොහොමද මේක කරන්නේ? නිකං කරන්න බෑ. Through මේ වැඩේ වෙන්න ඕනේ through understanding the entity and its environment. That is the new point that I want to that I require to explain here. Other areas I have already explained. ඔයා මේක කරන්න ඕනේ මොකද්ද? Identify and assessing risk of material misstatement through understanding the entity and its environment. Standard explain you, right? Standard explain you when you understand, basically without understanding the entity. There are 6 areas of understanding. SLAs 315 says, look here, you need to understand 6 areas of the business. If you don't understand these 6 areas, it is very difficult for you to identify and assess risk. Not difficult, impossible I would say. That's why it says, through this understanding, identify the risk. මෙන්න මේ understanding එකත් එක්ක identify the risk. නිකන් ගිහලා උඩ පැනලා jump කරලා පොත්පත් අරගෙන risk assessment එක කරන්න බෑ. No way. Carefully understand the entity and its environment. So we'll divide this standard into 2 categories. One, identify and assessing risk of material misstatement, and understanding the entity. First we'll focus on understanding the entity. මේ ඊතල තුන යන්නේ arrows ටික යන්නේ understanding the entity part එකකින්. හරි. There are 3 questions to understand. Why understanding is important? මොන මගුලටද මේ understanding important? Understanding the entity and its environment. Why? Always ask questions. Why? 3 answers. Why? To identify and assess the risk of material misstatement. Obvious. Standard want you to identify and assess risk of material misstatement through understanding the entity and its environment. I think to identify and assess risk of material misstatement, that understanding is must. Answer first. Why? Second, to design and perform further audit procedures. Based on this risk assessment only, you can decide your further next step of testing internal controls or performing substantive procedures. To design and perform further audit procedures, this understanding is important. To exercise audit judgment, like materiality and to select sample size, right? This understanding is important. What is material? That understanding is important. Why is answered. What we need to understand, standard says identify 6 areas of understanding. 6 areas of understanding. You must understand 6 areas: industry, regulatory, and other external factors. Nature of the entity. Entity selection and application of accounting policies you should understand. Entity's objectives and strategies and related business risk you should understand. Entity's key performance indicators you should understand. And internal control system, framework, environment you should understand. So these 6 areas in your study pack has properly conceptualized like this into an image, into a conceptual visualization. I will use same image that is there in your study pack to explain this. Understanding the entity and its environment. Number 1, industry and regulatory environment. When you understand the industry, you need to understand applicable tax laws and regulations. Regulatory framework. If you are in banking industry, if you are auditing, let's say commercial bank, you must follow central bank circulars, central bank rules and regulations. Then cyclical and seasonal activities. Let's say if you are auditing Cargill's Food City, Kiel's, December, April, there is high revenue. So then you have to focus on those. Then market and competition. Are you auditing competitive client? Is there a competitive market for this? Then accounting principles, energy and supply cost, interest rate of the market, product technology. So what is the technology that they use to manufacture their product? So that is important to understand, right? Now let's say one example, why this is important. Now let's say the market and competition, the market. Now apartment, construction industry, right? Construction industry. There's no demand for apartment. There's no demand for constructed houses. So then revenue come down. then your cash flows come down. You might not be able to pay for your suppliers. So then going concern is a problem. Finally, to understand that going concern risk, the understanding industry factors is really important. The second point, nature of the entity. Finance, how they have finance, whether it's highly geared company or are they fund by shareholders only, financing. Investment, where they have invested, is their investment portfolio. Financial reports, how do they prepare financial statements, right? Nature of the entity. And business, key business product, key shareholders, key product, key branches, you have to understand. Then selection and accounting policies. Now let's say you are in WTC. So how do they select investment property standard? Whether it's a fair value standard, a fair value method or cost model. If it is fair value, how do they value it? What assumptions, what estimate, what judgment they have considered? You have to understand. And their business strategies, expansion strategies, use of IT, industry development, new product and services, expansion. They have intention of going to India, Australia. Their expansion strategy is that. With that, do they have a cash right now? Are they going to finance through external funding? If so, can they survive? Will that give you business risk? That's what you need to evaluate. Then internal controls, control environment, control monitoring system and control activities like that. That is purely control environment. And key performance indicators, where is it? Where is that? Somewhere. Financial performance, key performance indicators, right? The bonuses depends on the sales targets achieved by sales team. So then what is the risk? To take bonus, there can be manipulation to revenue. That risk you should understand. Now let's say finance manager is having a risk to reduce overhead, right? Therefore, they have not identified impairment of property, plant and equipment. There can be misstatements, right? Finance managers having a risk KPI to reduce overhead. Therefore, the capital expenditure, revenue nature expenditures like repair and maintenance, they have capitalized. Once you capitalize, your P&L will be improved. Likewise, manipulations can be there. That is the risk you should understand through KPIs. Financial analysis, competitors, employee, key performance measures. Yeah. So these are the 6 areas of understanding. So once you understand these 6 areas, you can identify and assess risk associated with these areas, right? So that's why standard says before you jump into risk assessment, I mean identify a risk of material misstatement, you understand the entity and its environment. That's done. So once you understand the entity and its environment, then you do risk assessment. So arrows coming from this. Identify and assess a risk of material misstatement. How do you identify and assess risk of material misstatement? There are four steps. 4 steps of this, right? When you identify and assess risk, there are 4 steps. I will explain you with an example. There are 4 steps. Number 1, identify risk through the process of understanding. That we have done. We understand the business and identify the risk. Then identified risk, then you have to assess identified risk. How do you assess? And evaluate whether they relates more pervasively to the financial statement as a whole. How significant this risk is to the financial statement. That's your assessment. Are those significant risk or low risk or high risk? Relate the risk, what can go wrong at assertion level? What assertion can be affected because of this risk? And consider likelihood of the risk cause in the material misstatement. May risk ඇති වෙන්න තියෙන probability එක. The chance to happen it, right? Fine. මේක මෙහෙම කිව්වට තේරෙන්නේ නැහැ. Let's take one example, right? Identify risk through the process of understanding the entity. There's a KPI for the sales team to achieve sales target given to marketing manager may result, may result in overstatement of revenue. Because once you achieve sales, only commissions, bonus will be given to sales team. So then it will be risk. That's the risk. Overstatement of revenue. Assess the identified risk and see whether it's more pervasive to the financial statement. Yes, because sales can be manipulated. Your sales figures can be manipulated. Your sales can be increased, try to increase to get the bonus to achieve sales target. What assertion can go wrong? Occurrence and completeness. There can be recorded sales which has not been occurred. Your completeness of sales and occurrence will be affected because of this revenue overstatement. And the chance to happen is there's a KPI to achieve revenue target, because when you achieved only the bonus and other benefits like increment, commissions will be given. The chance to happen it is also highly possible. So this is the application of these 4 steps to live example. The outcome of this risk assessment, right? Assessment will end up with another important point, a significant risk. It can be a significant risk. Examiners always testing this, not always, sometimes testing significant risk, right? Last time also they have tested. Let me explain. Significant risk meaning complex or unusual transactions that indicate fraud or other special risk. It can be fraud risk or other special risk. Complex unusual transaction for which it's required special audit consideration. Then if it is complex unusual transaction that gives fraud risk or special risk characteristic, for those it's required special audit consideration. If you identify those risks, it's required special audit consideration. How do you explain? Complex unusual transaction which gives fraud or other special risk, then it's required special audit consideration that we identify as significant risk. What are significant risk? Risk of frauds, its a relationship with recent economic and accounting developments, the degree of subjectivity, example valuation, pending litigation, unusual transaction like Food City is having 500 worth of invoice, which can't be, because Food City normal per transaction value can be 100,000 maximum, but you can see 500,000, which is unusual. A significant transaction with related party transaction always subject to inherent risk. The complex transaction like valuation of biological asset. So these are the few examples for significant risk. So that's 315. Identify and assess risk of material misstatement. We did that, identified. How do we assess? There are 4 steps, and identify finally significant risk. And first part of the standard we explained understanding the entity and its environment. So basically risk assessment and identifying risk and assessing risk is 315. Once you identify and assess risk, auditor, you can't sleep properly. You have to respond to the assessed risk. SLS 315 මල්ලි නම් මෙයා අයියා. මෙයා තමයි රිස්ක් එක අඳුරලාගෙන දෙන්නේ. මෙයා තමයි ඒකට රෙස්පොන්ඩ් කරන්නේ. මූ හොරා අල්ලලා දෙනවා 315, හොරාට ගහනවා 330. Responding to the assessed risk. For responding purpose, I'm a little faster because we have to manage the time also, right? Responding to risk. Respond for the purpose of responding, risk can be divided into 2 categories. One is financial statement level risk, other one is particular assertion level risk. Because all risk will not impact on particular assertion. Some of the risk can be identified as financial statement level risk. What is the financial statement level risk means? That will impact on the entire set of financial statement. That have impact on balance sheet, P&L, cash flow, overall impact to the financial statement, overall impact to the business, which is called financial statement level risk. What kind of risk? Example, let's say finance manager went or left close to the year end. Now no one is there to prepare financial statements. So that is financial statement level risk. Company decided to go for listing, IPO. So today you are a private limited company and you decided to go for listing, Colombo Stock Exchange. So that has impact on overall business. Change in senior management, CFO left, director board change, and new finance manager has appointed, new HR people has come, new sales team has appointed, senior management change. That has impact to the entire business. New finance manager having business administration degree. Having business administration degree, can you control the financial statement? Might not, because he is expert in business administration, not in financial statement. So that has impact on overall financial statement. COVID-19, that has impact on entire business. So these are financial statement level risk. When it's come to particular assertion level risk, means risk specific to transaction, risk specific to account balance, risk specific to presentation and disclosures. Let's say some assets are not depreciated. You have not depreciated, maybe through mistake or purposely. That has impact on particular transaction, which is depreciation and property, plant and equipment balance, or understatement of revenue due to missing invoices. That doesn't have impact on the entire business. That has impact on only revenue part of the business, revenue and the receivables. So these risks are specific to particular assertion, can be transaction level assertion or account balance level assertion or presentation level of assertion. So risk for the purpose of responding or responding purpose, we can divide into two categories. If it is financial statement level risk, the response is overall response. We identify, we name it as overall response. What is overall response? It is very simple. Emphasize audit team the need of maintaining professional skepticism. Why? The finance manager has left from the organization. Senior management has changed. Finance manager having lack of competence. And company today private limited, but tomorrow they are going to list in Colombo Stock Exchange. Therefore, professional skepticism is really important. Assessing additional resource requirement or assigning additional resources to audit because financial statement level risk is high. Improve more supervision, put more supervision to the audit, incorporating unpredictability to the audit procedures, or you perform surprise audit procedures that they will never think audit is going to perform. Making general changes to nature, time and extent of audit procedures. You change your nature, time and extent of procedures. You plan to perform some procedures, but you change them suddenly. Why? Risk is very high. So these are the overall responses that you can use to manage what? Financial statement level risk. But when it's come to particular assertion level risk, the assertion level response, this is important. That depends on the risk assessment. That was the assessment you have done in SLAS 315. In SLAS 315, you have assessed some of the risk as low, moderate, high, and significant. I explain you significant risk. Significant risk means what? Unusual complex transaction that required special audit consideration. Standard giving you guideline, if the risk is more low or moderate, you can satisfy with test of controls. If the risk is moderate or high, you can satisfy with substantive procedures. But if the risk is so significant, it's required combined approach, meaning test of control plus substantive procedures you can perform. So this is the guideline, right? So what is your test of control? What is your substantive procedures? It is inquiry, inspection, observation, recalculation, reperformance, and analytical procedures. So basically, this is the nature of audit procedures that you can use based on this classification. If it is low moderate, you can perform certain test of control and satisfy, but if the risk is high, you have to perform substantive procedures. But if the risk is so significant, it should be combined approach. Even though this classification, this guideline is given by your standard, there is no restriction of performing substantive procedures even though when risk is at lower level. This is some sort of guideline. This is not a hard and fast rule. There's no restriction of performing substantive procedures when risk is at low level. That's fine. But if you can satisfy with test of control, you can satisfy with test of control. But if auditor decided, that is auditor's judgment. No, I need to perform substantive procedures. Also, yes, you can perform substantive procedures. So this is SLAUS 330, responding to the assess risk of material misstatement. For the responding purpose, summary is what? We can divide risk into two categories. Financial statement level risk, particular assertion level risk. For financial statement level risk, there's a response called overall response. What is overall response? I explained. For the assertion level risk, assertion level response, it can be test of control or substantive procedures or combined approach that depends on what? The level of risk. So we have covered three standard, 300, 315 and 330. Before we go to 320, which is materiality, let me go to the past paper question. You also can download these. Question number 6 of June 2024. June, which is a recent paper, June 2024, question number 6. Right? Part A. Always look at the mark. 10 marks. With the things that we have learned, think how simple to earn these 10 marks. මේ ලකුණු 10 ගන්න හරි lazy. But don't do this mistake. During this session, I told you some important topics that I have covered. So this is also one of the main part. So next 10 to 15 minutes will give you very important guideline how to manage your exam paper. Assess. Bold. Examiner wants you to assess. Then what assess කරන්න ඕනේ? What you need to assess? Risk of material misstatement, the golden word of auditing. I told you at the beginning, the golden word for me in this subject, risk of material misstatement. දැන් ඔයා දන්නවා risk of material misstatement. දැන් ඔලුවට එනක වරන් සටගල ඔලුවට එන්න ඕන මොනවද? risk of material misstatement mean risk of having fraud and fraud errors. කොහෙද මේක explain කරන්නේ? SLS 315 වල. කොහොමද? Identify and assess risk of material misstatement. කොහොමද? Through risk assessment procedures. Risk assessment procedures outcome එක high risk or low risk or significant risk. අන්න ඔලුවට ආවා. Risk of material misstatement including risk of fraud. Fraud risk එක අඳුර ගන්න ඕනේ. At the entity level and financial statement level. For the responding purpose, we categorize risk into two categories. Financial statement level and entity level. Assertion level as well as financial statement level. That will be relevant for the audit of SSL is the company name for the year end 31st March 2024. අපිට අඳුර ගන්න ඕනලු risk of material misstatement at financial statement level as well as assertion level. අපි කතා කරේ නැද්ද ඔයා? මේ විනාඩි පැය භාගයකට කලින් කතා කරා. You are expected to provide at least 6 such misstatements. අඩුම ගානේ 6 misstatements වත් දෙන්න ඕනිලු. ඒතකොට එකකට ලකුණු 1.5 ගානේ නේ. නෑ some sort something like that. කොහමරි ලකුණු 10ක් හම්බ වෙනවා. At least 6 බලන්න ලකුණු මේක 10න් බෙදපුවා එකකට ලකුණු ගන්න හම්බ වෙනවා. You are expected to provide at least 6 such misstatement. මොන misstatement? Risk of having material misstatement. දැන් අපි අඳුර ගන්න යන්නේ risk of material misstatement. බලමු අඳුර ගන්න. right. අපි බලමු මේ 1 page තිබ්බම හරියම ඔයා හිතනවා මේක මාර අමාරුයි ඉවරයි අපිට නම් මේක කරගන්න බැරි වෙයි. No, nothing like that. Right? Which is wrong. මේක හරි lazy. බලන්න කියපුවම ඔච්චර lazy ද කියලා මේක. Right? Okay. My recommendation, let me check whether I can do it or not. I believe you can read this. Okay, fine. Smart Solution Private Limited, SSL, trades mobile phones and accessories, desktop, laptop, printers and other office equipment. Basically, they are selling IT equipments. SSL has been authorized agent for a number of mobile phones and office equipment brands. Maybe Apple, Samsung, likewise Lenovo, so many brands they are importing and selling, maybe, right? They are authorized to sell. Items are imported from manufacturers, the importers, manufacturers, they are importing. The import restriction and devaluation of LKR in the foreign exchange conditions, foreign exchange market in the previous year has impacted SSL's operation. Onna risk එකක් ආවලම එතනම. Right? මොකද risk එක? Import restriction imposed and devaluation of LKR in foreign exchange market in the previous year has impacted on SSL operation. What is the risk? Going concern. Import restriction, they can't import. And even though limited imports are there, to import IT equipment, you have to pay so many LKR to buy dollars. So for $1 you have to pay sometimes 350, 360. Devaluation of LKR has impacted on your business. Going concern risk you have to assess. Examiner want to assess here. Assess. You have to assess going concern. How do you assess? Because I'm explaining the answer also. Number one, because of import restrictions and devaluation of LKR has impact on going concern of the business. Number one, going concern risk is the first risk that you can identify, right? Because of import restriction and devaluation of rupees. As a result of condition, SSL retain turn accumulated losses. Accumulated losses, another factor to justify going concern. Accumulated losses mainly due to impact of exchange losses, decrease in profitability. Because of this rupee devaluation, ended up with what? Accumulated losses. Number one, risk is what? Going concern risk. How do you assess? Because of the import restriction and the devaluation of LKR has resulted in accumulating losses which will indicate going concern risk. Number one answer we have written. That's the answer for our first risk, right? Assessment. In financial year 2023-2024, the improvement was noted in the market condition which with the establishment of LKR. Now LKR getting appreciated. Now little bit okay, but still you have ended up with accumulated loss. Second point, I'm explaining the answer as well because the intention is to identify 6 material misstatements. However, in 2024, value added tax was increased to 18% and the previous exempted item also become liable for VAT. This resulted in decrease in sales volume during the last quarter of 2023 and 2024. Because January 2024 means the last starting date of the last quarter of 2023 and 2024 financial year. Now VAT rate has increased, which will result in decrease in revenue, and previously exempted item also now liable for VAT. Now what is the risk? Risk is this: there can be non-compliance with rule, laws and regulations. You have to carefully evaluate what items are liable for VAT and what items are exempted. If we have applied 18% for the items which are not liable, it's a non-compliance. In other way, if you have not applied 18% for items which are not extended, also violation of laws and regulations. So this is another risk at assertion level or entry level, maybe financial statement level. Financial statement level. What is that? The non-compliance with laws and regulations. Right? There's a risk of non-compliance with laws and regulations. 18% bet. SSL has 3 sales centers in Colombo, and it has appointed 10 authorized dealers. Authorized dealers. Sales are recognized at the point of delivery and no further condition attached. Example, returning of goods. You can't return the goods. The general credit period is 30 to 60 days. Here I am not seeing a significant risk because revenue recognition also fine. At the point of delivery, yes, we can identify revenue because you can't return the goods. If there is a policy to return the goods, if the items are not sold by the authorized dealers, you can't recognize revenue, right? But at the point of, I believe, at the point of delivery, you can recognize revenue because you have passed the risk and rewards and control over goods to the dealers because there is no return policy. During the year, SSL shift the promise to new place and terminate the earlier agreement. The signed lease agreement is available. Third risk for me. Now leasing standard is come to the picture. SLFRS 16 leases. Now when it's come to lease, standard says you have to identify right of use asset and the lease liability, right? Lease liability, how do you establish? Present value of future lease payments. You have to discount future cash flows. You have to select appropriate discounting factor. You have to calculate present value properly when you establish right of use asset. Then right of use asset subject to depreciation and calculation of present value of lease liability is subject to assumption, estimates, and selecting appropriate discount factor is a judgment. So there's a risk of identifying correct right of use asset and lease liability. Third one, you have to assess that. There's a risk of selecting proper discounting factor and establishment of cash flows and calculating present value of future lease payments. Third point. Key members of the financial team resigned in April. Financial statement level risk, because this 6 material misstatement should consist financial statement level risk also, because exam is specifically saying here cover financial statement level risk. This is one of the financial statement level risk because key members of the financial team, finance team resigned in April 2023. As a result, new team is look over the responsibilities in May 2023. Now new team has appointed to prepare financial statements. We don't know the competent level of those employees. We don't know why the previous members has left from the organization. That indicate financial statement level risk, right? Then the overall response is applicable here. You have to assign key people, you have to improve more supervision, you have to apply professional skepticism, likewise procedures you have to perform. Fourth risk. You are the audit manager of audit of SSL for the year ended 31st March 2024. The following were noted based on the draft financial statement end of 31st March 2024. The debtors analysis 30 to 60 day bucket 56 million, 30 to 60 day 45 million, 61 to 90 and more than 90 32 million. Now debtor balance has accumulated and more than 90. We are giving 30 to 60 day credit period. That was given in the question somewhere. Let me show you. 30 to 60 days credit period. But significant amount of receivable is there more than 90-day bucket. The recoverability of this is a question. Now debtors impairment is a question in this question. Why? Because here there is no significant difference in impairment provision compared to the one made in previous year, impairment, debtors impairment provision. So they are talking about actually inventory, sorry, here in second point. But here if you look at the fifth point that you should mention under risk of material misstatement, risk of debtors valuation. Because more than 90-day debtors are subject to debtors impairment. So then SLFRS 9 expected credit loss model, ECL model, you should apply and identify proper impairment balance, because debtor balance is accumulating under each and every bucket. The fifth point is risk of debtors impairment is the assertion level risk that you have to elaborate. How do you assess? The debtors balance is getting accumulate, more than 90-day balance is significant, therefore auditor has to evaluate whether expected credit loss model has been applied and identified proper debtors impairment balance, because there is a risk. Next point, there is no significant difference in impairment provision compared to the one made previous year. The inventory balances as follows. Inventory balance, trading stock has increased from 375 to 446. Impairment provision come down, which can't be. When inventory balance is going up, definitely provision for impairment should also going up. Why? There are import restrictions, there is dollar depreciation, and companies making losses and sales coming down. Because of that, the provision balance is questionable. The provision balance, I think, should be more than this. When stocks are at 75 level, 92 million impairment, but when it's almost double, the impairment provision for stock has come down, which is not realistic. This is unreasonable. Therefore, stock impairment should be revalidate based on LKS 2. The next, now already six risks we have identified and assessed. The sales manager closely monitor sales trend. Sales prices are authorized by him. He is closely monitoring sales trend, and he is authorizing price list by himself, and the price list for each month is maintained in the system and updated. System is updated. The actual sales quantities by each product are maintained. There are reviews by management monthly during the management meeting. Based on the trend, discount and promotions are determined and documented. Finance manager participate for these meetings as well. The variable compensation, very important, the variable compensation bonus of senior management is based on the target provided to them, including revenue target. The last one that you can identify as risk, what? Manipulating sales or overstatement of sales to get the variable compensation to sales management. That is the risk. Always when sales are going up, when sales are at higher rate, your bonus and other variable compensation will be increased. To get that increment, to get that variable component, there's a risk of manipulating revenue. That's the next risk that you can identify at assertion level. So 7 risks I explained. If you can assess that properly, earning 10 marks is not a big thing. But you need to understand that your answer should cover both entry level risk as well as financial statement level risk. 10 marks. Assessment of risk of material misstatement. You had applied the knowledge of SLA US 315 You have to understand the business through case study. With that understanding, you have to identify and assess risk of material misstatement. So what we have covered today, we covered basic elements of we covered financial statement assertions, we covered audit risk, we covered audit procedures, we covered basic planning standard, we covered SLUS 315, identify and assessing risk of material misstatement through understanding the entity and its environment, and we responded to the assessed risk, and we managed to discuss one past paper question also. So I was little faster because this exam focused seminar session, and we will have another 2-3 sessions prior to the exam for your benefit. But when it's come to next year, focusing on June 2024 exam, we will have comprehensive, detailed discussions for each and every auditing standard and other concept of this syllabus with past paper discussion in meaningful manner. So I invite you to join for those sessions as well if you have an intention of facing this paper in June 2024. Otherwise, you can use this seminar session and future sessions also prior to sit for your exam. I think that will add value to your preparation for this exam. Thank you very much.